Aman and Sania.
Good evening, sir.
How are you doing, Aman? How are you doing, Sania?
Good, sir. What about
Fine, sir.
Hmm. Okay, all right then. So, in the previous two classes, from the previous two classes, we were discussing about the admission of partner, and in the last class, I guess we started this new concept. We were discussing about the treatment of goodwill, and in case of the treatment of goodwill, we understood that the purchase goodwill is very simple. We need to basically write off the purchase goodwill, and the partner's capital account need to be debited. That means old partners need to bear the loss of writing off the purchase goodwill. But when it comes to the self-valued goodwill, the treatment for self-valued goodwill is a little different in this case. When it comes to the self-valued goodwill, and any partner is being admitted to the partnership, then such new partner is advised to bring some cash by way of premium for goodwill. That means he will have to contribute some amount towards the self-valued goodwill, and the same amount need to be distributed among the old partners, or you can also call it the sacrificing partners, right? So we discussed all these things in the previous class. We did one or two questions based on this concept as well, I guess. And I think I have given this question 106 as your homework, if I'm not wrong. Please confirm whether you have done this question or not, Sania and Emma.
yes, sir?
Done.
Yes, sir.
All right. So please confirm your answers. Tell me your answer. Starting with, first of all, Aman, please tell me the answer you have got for this question. Tell me the answer for case A first, and then case B.
So for the first one,
Mm-hmm.
um, I got cash account debit to premium for Goodwill account
Mm-hmm.
2000,
Mm-hmm. Perfect.
and the second one,
Mm-hmm.
premium for Goodwill account debit to B's capital account to C's capital account,
Mm-hmm. Amount.
1,200 and 800.
Good. And in case of in case B,
In
also tell me in case of B.
in B, uh, I got 2,100 in the first one,
Mm-hmm.
and in the second one, B's capital account 1,400 and C's
All right.
capital account
Okay.
700.
So I guess you have done it correctly. All right. So also, Sani, you got the same answer, or your answer is different?
Same answer, sir.
Same answer. All right. So since the question was easy, I'm sure that Halima also must have completed this question. So I'm moving to the next question. We'll do a few more questions based on the treatment of goodwill only in today's session. And let's start with question number 107. So this one is little different since. All right, let's continue. See, question 107 is saying that there are two partners, Anshul and sorry. Okay. So there are two partners, Anshul and Parul. Their profit sharing ratio currently is 3:2. They are admitting Payal as partner for 1/4 share. All right. And Payal will be bringing 5 lakh as capital, and her share of goodwill by check. So the amount of goodwill that she will be bringing in is not directly given in the question. We will have to determine his share of capital. First of all, we will have to determine the value of the goodwill in this case. Anyways, so question is saying that it was agreed to be value goodwill at 3 years purchase of average profit of the last 4 years. and profit for the last 4 year ended at 31st of March were rupees. These are the profit of the preceding 4 years: 4 lakh, 5 lakh, 6 lakh, 7 lakh. Few additional information is also given. Closing stock for the 31st March 2018 was overvalued by 50,000. So obviously, if there is a overvaluation in the stock of 2018, then the profit calculated for the year 2018 must also be incorrect. All right. So how the overvaluation is going to impact the overall profitability of the firm, that we will understand in a while when we will solve it. One more information is given in the question is that 1 lakh should be charged annually to cover the management cost. So the earlier while calculating the profit for different years, we didn't consider the management cost. So we have calculated these profit without taking into consideration the cost incurred by the management, without taking into consideration the management cost. So to first of all, to find out the value of the goodwill, we will have to first of all determine the correct amount of profit. And after finding out the correct profit, we will find out the average profit, and then accordingly we will be able to determine the value of the goodwill. So the goodwill need to be calculated on the basis of average profit of the last 4 years. That means we will have to apply the average profit method. I'm sure all of you are able to recall that there are various method of calculation of the goodwill. One of which is the average profit method. Then there is a super profit method, capitalization method, weighted average method. I'm sure all of you are able to recall this, na?
Yes, sir.
Okay. So taking into account all these additional information, we will first of all find out the correct profit, and then accordingly we will have to find out the amount of goodwill, and then we will pass the journal entry. So the main question in the in 107 is to pass the question is asking us to pass the journal entry. So we'll first of all start with the calculation of the profit. All right, so we'll have to prepare a format, a statement showing calculation of profit. So how many years are there? Starting from 2015-16 till 2018-19, the profit is given. 2015-16, 2016-17, 2017-18, and 2018-19. So profit of these years are already given. Profits. So for the year 2015-16, the profit is 4 lakh. Then 5 lakh. Then it is 6 lakh. And then finally 7 lakh. Okay. Now question is telling us that the profit in the additional information number 1, it says that closing stock for the year ended 31st of March 2018 was overvalued by rupees 50,000. Now see, you have to understand the impact of overvaluation of the stock. See, whenever stock of any particular year is overvalued, whenever the stock is overvalued, it affects the profitability, it affects the profit for the two years. Whenever stock is overvalued, it affects the profit of the current year for which the stock was overvalued, current year, as well as the next year. Now you need to understand in this case, which is the current year. So overvaluation is done in the stock of 2018. So that means 2017-18 is the current year and 2018-19 is the next year. All right, I hope this point is clear. Now you need to understand whenever stock is overvalued, how does it impact the profit of the current year? See, whenever stock is overvalued due to the overvaluation of the stock, profit of the current year increases. Profit of the current year increases. Profit increases. Right? Profit increases by the amount by which the stock is overvalued. Similarly, for the next year, when the closing stock is overvalued, see, I'm talking about the closing stock, not the opening stock. Whenever closing stock is overvalued, it affects the current year's profit. How? Profit basically is overvalued, and it also affects the next year profit. Profit of the next year, how the next year profit will be impacted? Under the profit for the next year will be undervalued. So profit reduces because of the overvaluation of the closing stock of the next year, and profit increases due to the overvaluation of the closing stock of the current year. Now see, since the profit for the year 2017-18 is given as 6 lakh, right? So this amount must have been overvalued now. Since the closing stock of the year 2017-18 was overvalued, that means the profit must have been overvalued. So in order to correct this profit, what we need to do? We will have to subtract the amount by which profit is overvalued, right? We will have to subtract the amount by which stock was overvalued, and similarly 2018-19 profit must be undervalued, right? And to find out the correct profit, what we will have to do? We will have to add back the amount. We will have to add the amount by which the stock was overvalued in the year 2017-18. Got it? I hope this point is clear.
Yes, sir.
See, what I'm saying is that to correct the 2017-18 profit, we will have to reduce the amount by which stock was overvalued, and to correct the profit for the year 2018-19, we will have to add the amount by which stock was overvalued. This is the solution. This is how we will rectify the issue that we have created previously. I hope this point is clear, everyone.
Yes, sir.
Okay. So see, to finding out the correct profit, what we will be doing. Just a minute. So first of all, we will have to less the overvaluation of the stock, less closing stock overvalue. So closing stock was overvalued by 50,000. That means we will have to subtract 50,000 out of 6. And similarly, we will have to add the amount in the 2018's profit. So add closing stock overvaluation. That is 50,000. Done, everyone? Is this clear, all of you? Is
Yes,
this
sir.
point clear? Okay. Now moving on to the additional information second, it says that 1 lakh should be charged annually to cover the management cost. So previously we did not deducted this amount. We haven't deducted this amount while calculating the profit for the year 2015, 16, 17, 18, 18, 19. Now in order to correct the profit, in order to find out the correct profit, we will have to subtract it now. So we'll have to write down less management cost. Management cost will be subtracted from out of the profit of all the previous years. So 1 lakh will be subtracted. Now everything is done. Now we will be able to find out the correct profit of the last 4 years, and that will be 4 lakh minus 1 lakh. In case of 2015-16, it will be 3 lakh. For 2016-17, it will be 4 lakh. And 6 minus 6 plus just a minute, yeah. 5 4 lakh 50,000, 4.5 lakh. And in case of 2018-19, it will be 7 minus 1 6 plus 50, so it will be 6.5 lakh. Got it, everyone? Is this clear?
Yes, sir.
Please note this down, then we will find out the average profit. Please note it down quickly. Tell me once you are done writing it.
Done, sir.
Done, Halima, Aman? All of you are done?
Done, sir.
Okay, now let's find out the average profit of the firm. Average profit equals to last 4 years profit, 3 lakh plus 4 lakhs plus 4.5 plus 6.5 divided by 4. So the average profit for the last 4 years will be 3 plus 4 7 plus 4.5 plus 6.5 divided by 4, it will be 4.5 lakhs. So 4 lakh 50,000 is the average profit of the firm. All right. Now, since the average profit is here, now we will be able to find out the goodwill, total goodwill of the firm. Goodwill of the firm. To determine the value of the goodwill of the firm, we will be applying the average method. So by average profit method. And in case of average profit method, the formula is very simple. The average profit of the firm multiplied with the number of years purchased. Right, everyone? So 4,50,000 into how many years of purchase was there? number of year purchase was 3 years purchase. 3 years purchase, that is given in the question. So multiplying it with 3 years. When you will multiply it with 3 years, you will get 13.5. So 13.5 means 13,50,000. So this is the amount of goodwill of the firm. All right, I hope this is clear, everyone. Halima M. Ansani, please confirm
Yes.
if it is clear or not. Halima, is it clear to you? Okay. Now, since we got the value of the goodwill of the firm, now we will be able to find out C's share in the goodwill. C, who was the new partner? New partner. The name of the new partner was Payal. So Payal is coming for 1/4 share, na? So that means Payal's share in goodwill of firm equals to 13,50,000 into 1/4.
3,50,000.
Sorry,
3,50,000.
3,50,000. Okay. So this is the Payal share of goodwill in the firm. All right. So we got the share of goodwill by that will have to brought in by the file. Now we need to pass the journal entry, since question requires us to pass the journal entry. And the journal entry for the premium for goodwill will be cash account debit. First of all, the first journal entry will be for bringing in the goodwill. That will be cash account debit to premium for goodwill account. And amount will be 3,50,000. Being premium for goodwill. Brought in by. Okay, then we need to show the general entry for distributing the premium for goodwill. And for that, we have to pass the general entry as premium for goodwill account debit to sacrificing partner. So who are the sacrificing partner in this question? Anshul and Parul are the sacrificing partner. To Anshul's capital account to Parul's capital. 3,50,000. And to distribute it among the Anshul and Parul, we will have to determine the sacrificing ratio. All right. Being goodwill distributed between partners. Okay, but to distribute the premium for goodwill among the partners, you will have to find out the sacrificing ratio of the partners, Anshul and Parul. So for that purpose, let me make a extra working note. Working note showing calculation of sacrificing ratio. Okay, so for Anshul, how much Anshul will be sacrificing and Parul will be sacrificing. For that purpose, we will have to first of all determine their new ratio. So as question is telling us that Payal is coming for 1/4 share, that means the remaining share will be 3/4, right? Everyone is able to understand this. If Payal is entering for the 1/4 share in the profit, that means the remaining share of the firm will be 3/4. Is that correct?
Yes, sir.
And the same will be shared between the Anshul and Parul in their old ratio 3:2. So this is how we will be showing the calculation of, just a minute, give me a moment. So remaining share is 3/4. That means is Anshul's new share equals to 3/4 into it was 3:2 now. So 3:2 means 3/5. So 9/20, and Parul's share equals to 3/4 into 2/5. That means 6/20. This is the new profit sharing ratio of Anshul and Parul. Now we will have to determine their sacrificing ratios. For sacrificing ratio, what we will do, we will simply subtract the old ratio out of the new ratio. So new ratio of the partner minus the old ratios. All right. So for Anshul, new ratio is 9/20 and his old ratio was 3/5. And for Parul, new is 6/20 and old was 2/5, right? So this way we will calculate the sacrificing ratio of Anshul and Parul. So this will be
-3.
9 minus 12. So minus 3/20, is that right?
Yes.
And in case of 6 minus 8, that means minus 2/20. Now you will notice that the sacrificing ratio of Anshul and Parul is same as the old ratio. So mostly the sacrificing ratio and the old partners profit sharing ratio most of the time are equal. So if you wish, you can directly distribute the premium for Goodwill in the old ratio as well. Ultimately, you are going to get the same answer. When you will find out the sacrificing ratio also, you will get the same answer. So what do? We usually distribute the premium for Goodwill in the old ratio. Sacrificing ratio. So in this question, we will distribute the profit in the ratio of 3:2. So 3:2 basically means 3,50,000 into 3,50,000 into 3/5. So that means 2,10,000 for Anshul, and remaining 1,40,000 will be for Parul. Correct me if I'm wrong. Tell me if anyone is having any doubt. Tell me, everyone, is everything clear in this question?
Yes, sir.
Okay. So all of you want to write this down, or all of you are done? Anybody want to write this down? Please let me know if anyone want me to score.
Can you scroll down?
Scroll down. As in, which section of the solution you want me to scroll to?
Working notes.
Working. Please tell me once you are done writing it, so that we can move to the next question.
Done.
Done? Everyone done?
Done, sir.
Done. Okay. So let's move to the next question. We are done with question 107. Now we will move to 108. Okay. So this question is saying that there are two partners, A and B. Their profit sharing ratio is also given 2:1, and they have admitted C as one of their partner for 1/4 share in the profit. C is bringing in 30,000 for his capital. Okay. So he is bringing in 30,000 as his share of capital, and he will be bringing 8,000 out of his share of rupees 10,000 for goodwill. So the total share of goodwill that he will have to bring in is 10,000, but out of 10,000 he is only bringing in 8,000 in cash. Remaining amount is not, he's not bringing in the remaining 2,000. The total obligation upon him for the premium of goodwill is 10,000, but he is only bringing in how much? 8,000. So, sir, how are we going to deal with the remaining 2,000? That we will understand. Before admission, goodwill appeared in the book at rupees 18,000. Now, see, whenever it is written in the question that goodwill appeared in the book, that means it is telling us about the purchased goodwill. See, goodwill can only appear in the books of account if it is the purchased goodwill. Self-valued goodwill is never shown in the books of account. It never becomes a part of the books of account. It does not appear in the books of account. So whenever question tells us that there is a certain amount of goodwill that is appearing in the goodwill, that is appearing in the books of account, that basically means the purchase goodwill. And I've already told you that how to deal with the purchase goodwill. Purchase goodwill is written off between the partners in the depending on their old ratios. All right, we need to show the journal entries. Okay, so basically we will have to show the journal entry for the capital, number one, for the goodwill, self-valued goodwill, as well as the treatment of the purchased goodwill, purchased goodwill. So we need to pass the journal entry for all these things. I hope the question is clear to everyone.
Yes.
Yes. Okay. All right. Let's continue with the solution. Okay. Moving on to the notepad. Question number. Which question number was? Question number 108. So solution to 108. Okay, so let's just first of all pass the general entry that are easy. Like for we will first of all pass the general entry for writing of the purchase goodwill. Treatment of goodwill appearing in the book. In the in the books. As I told you, a goodwill that appears in the book is the purchased goodwill. So it is the purchased goodwill. All right. And the treatment of the purchased goodwill, if you are able to recall, is very simple. What do we do in case of the purchased goodwill? We debit the partner's capital account. Old partner's capital account is debited to goodwill account, right? Everyone is able to recall that.
Yes, sir.
So we pass the general entry as A's capital account debit, B's capital account debit to goodwill account. Done. This is it. And the amount is 18,000. $18,000 need to be distributed between A and B. It has to be borne by A and B in their profit sharing ratio. The profit sharing ratio is also given in the question, that is 2:1. So 18,000 into 2/3 and 1/3. This is how this will be distributed. So 18 divided by 3 will be 6. 6 2s are 12. So 12,000 and 6,000. This way, the purchase goodwill will be distributed, written off, and the narration will be being purchased goodwill written off. I hope this point is clear, everyone.
Yes, sir.
Okay. Now we will pass the general entry for the capital. Treatment of capital brought by new partner. General entry for bringing in the capital by the new partner is very simple. It will be cash account debit to new partner's capital account. New partner in our case is C. So C's capital account debit. C's capital account credited, sorry. C's capital account. And the amount was 30,000. Being capital contributed by C. Now we will talk about the treatment of premium for goodwill. General entry in this case is, how do we pass the general entry in this case? Cash account debit, right? Everyone, cash account will
Yes.
be debited, yes or no?
Yes, sir.
See, now this is very important. See, what is the total obligation upon the new partner towards the premium for goodwill? He will have to bring how much? He will have to bring 10,000. The total obligation towards the premium for goodwill is actually 10,000, but he is contributing only 8,000. He is not bringing in the remaining 2,000. Now listen to me very carefully. See, if the total obligation stands at 10,000, then anyhow he will have to contribute 10,000. whether he is bringing in personally by way of cash, or if he is not bringing in sufficient amount as his share of as a share towards the premium for goodwill, then we will adjust the remaining amount from his capital account. Got it, everyone? See, firstly,
Yes.
what I'm saying is that first of all, the new partner has to bring the necessary amount of goodwill, right? But if there is any deficit, if there is any if there is certain amount which is remaining and which is not the new partner is not bringing in the remaining amount, then the remaining amount need to be the deficit that is arising need to be adjusted toward the capital account of the new partner. That means we will compensate, we will ask him to compensate out of his capital. So his capital account will be reduced by the remaining amount which is due towards the premium for goodwill. I hope this point is clear. Everyone, Aman, Sania, Halima, is this point clear to everyone?
Yes, sir.
So what journal entry we will have to do? Firstly, see cash, how much cash he is bringing in. He is bringing in only 8,000. He is bringing in only 8,000. But the total amount due towards the premium for goodwill to premium for goodwill stands at how much? 10,000. So there is an obvious difference between the amount that is bringing and the total premium for goodwill stands at. So the remaining amount, the difference that is arising will be adjusted out of his capital account. So what we will do, we will try to cover the loss from his personal capital account. That means we will pass the journal entry as cash account debit to C's capital account debit. C's capital account debit basically means we will reduce the capital account of C by 2,000 to cover our difference. This will be the general entry. I hope this point is clear, everyone.
Yes, sir.
So cash account debit, C's capital account debit to premium for goodwill, and we'll have to write down the narration as well, being premium for goodwill brought in. By C. I hope this question is clear, everyone. I'm just zooming out. If anybody want to write this down, please note it. Let me know when you are done. If anyone did not understand anything, please let me know that so that I can simplify it further to make it more clear. Halima, Sania, and Aman, is this question clear to all of you?
Yeah.
Halima, please tell me.
Yes, sir.
Can you explain that C part again?
You want me to
We
explain
got
the
that.
C?
Yes.
C, only C.
Yes.
Okay. All right. What is happening in the C section is that we are passing the general entry for the premium for goodwill. Now see, the total obligation of C towards the premium for goodwill is C actually have to contribute total of 10,000 by way of premium for goodwill. All right. But what he is doing, he is only giving 8,000 towards the premium for goodwill by way of cash. He is only bringing 8,000 as his share of premium for goodwill. That is in the form of cash. But the question is that his total obligation stands at 10,000. He is actually required to contribute 10,000. Then how can he contribute only 8,000? Now there is a clear difference. What he is bringing in and what actually is his obligation towards the premium for goodwill, there is a difference. Premium for goodwill stands at 10,000. He is bringing in only 8,000. Now the question is, what about the balance value? What about the balance? How are we going to deal with the balance amount? Balance amount is how much? Balance is 2,000. Now, how are we going to recover this amount? How are we going to cover this value? So we will try to cover this out of his capital account, out of the capital account of the C. So that means he will bring in 8,000 by way of cash, and the remaining 2,000 will be recovered out of his capital account. So the general entry will be cash account debit to capital account debit to premium for goodwill. So cash account will be debited by 8,000 since he is only contributing 8,000. Capital account will be debited by 2,000, and the remaining amount and the sum total of 8 plus 2,000 is equal to 10,000. Huh? So premium for goodwill account will be credited to partners. Premium for goodwill account. I hope this is now clear, Halima.
Yes, got it.
Okay. You want me to show this solution? Anybody?
Yes,
Done with the solution, everyone?
Done, sir.
Done. Okay. Just a minute. All right. So moving on to the next question. Let's talk about question 10109. Try question number 109 yourself. A and B are partners sharing profit and loss in the ratio of 3:2. They have admitted C as partner in the form for 1/4 share in the profit, which he takes 1/6 from A and 1/12 from B. C brings in only 60% of his share of firm's goodwill. Goodwill of the firm has been valued at rupees 1 lakh. Pass necessary journal entry to record this arrangement. So question, do you think, will you be able to solve this question in your homework? Shall I give you this question as your homework? Everyone, please tell me whether you will be able to solve this question in your homework, yes or no? Tell me na, Alima, Aman, Sania, anything you are finding difficult in this question? Please tell me so that I can explain that point. Otherwise, I'm giving you this question as your homework. Aman, Sania, Halima.
So the C brings in only 60%.
Yeah, out of, see, whatever the total obligation, whatever will be his total obligation, he will only contribute 60% towards that. That means 40%, let's suppose for the time being, the total amount of goodwill that he, the total amount of his share of goodwill is, stands at 50,000, for example. So what he have done, out of 50,000, he brought in only 60% by way of cash, or you can presume cash, and remaining 40% is still due. So due, which is not yet paid, or the balance amount need to be adjusted toward the capital account of the partner. So
Yes.
you will have to first of all determine the total amount of goodwill. You will have to first of all determine the share of goodwill of the new partner. You will have to determine the goodwill of the new partner, and then after that you will have to find out the 60% of that value and 40% of that value. 60% will be adjusted towards the cash, and 40% will be recovered from the capital account of the partner.
So we have to do 1 lakh into 1/4.
1 lakh into, just a minute, they admit C. Yeah, the goodwill of the firm has been valued at 1 lakh na. So that means
Yes.
C's share will be 1 lakh into 1/4. That means 25,000. And out of 25,000, he will be bringing 60% in cash, and remaining 40% is still due. So that will be 60% will be debited to the cash account, and the 40% will be debited to the capital account of partnership. Got it? Will you be
Yes.
able to solve this question now?
Yes.
Okay, so I'm giving you this question as homework. 109 will be your homework. Question number 10 is also pretty similar. I hope that you will be able to solve this question as well. So I'm giving you this question as homework as well. 1110. Please take the screenshot of this as well. Please take the screenshot. Let me know once you are done. Aman, Halima, Sania, done?
Yes.
Okay. So 110, 109, these two will be your homework. And I don't have any other question to discuss in today's class. So we will be ending our session at this point only. And we will start we will start maybe we'll start with a new concept in the next class, or probably we'll discuss few more questions based on the treatment of the goodwill. So that we will see in the next session only. But in today's session, we won't be discussing anything else. So this is it for today's class. All of you, thank you so much everyone for attending the session. I'm Sania Halima. We'll see you in